Hey, how's it going, guys? So I want to preface everything I'm about to say by making sure that you understand that I actually trade every single asset in the world. Like, I literally try to trade any asset that meets the conditions for a good trade. One of the main things about trading well is simply recognizing that you're not here to trade a specific name or a specific type of asset. You're more so here to trade a specific type of story. All that means is that stocks or moves or cryptos or future pairs or forex pairs or whatever it might be, moving in clear or good stories are the ones worth trading, because those are the ones that open you up to the most potential one-sided based market or the best type of reward, right? So before we talk about anything today, or before we do an example for today, I want to preface everything by saying that I trade everything. Some of the ways within which I do this is you guys can use free things like the TradingView screener. I'm sure you guys have seen this. Like there are screeners in TradingView. There are, where is it? Yeah, so you can see there's like screeners in trading. You can find a bunch of names. You can find forex pairs. You can select certain markets. You can do anything like this, right, to find stuff that you can trade. So before I say anything, I want you to understand that you don't have to pay me or pay anyone to like find things if you really want. Now, there are ways to find things and view things in a better light. That is one of the things that is provided to and accessible to all our members. One of the things that I'm personally using, you can see this in front of you, is a tool that basically scans the overall market with specific criteria that you can actually set yourself around timeframes that you personally like to use. So you can see it in front of you is like an hourly that I use, but you can set this to a minute or whatever it is. So you can actually scan things that are good on any given day and trade it. So before I talk about anything today, I want to preface our discussion with the fact that I'm actually trading any and all assets. That's very important to understand, because as you get better at trading, you'll start realizing that trading for the most part is just putting your money to work. Now, in today's video, what I wanted to do is I was actually taking a look just now at US 100, at US 30. So both of these markets are representative of US 30 is basically the equivalent of ES. So those of you that are futures traders, this is basically the ES version. US 100, the ES version of this would be NQ. Right, the NQ futures or the NQ contracts. So again, regardless of how you're trading these assets, some of you are trading these through CFDs, through FX pairs, some of you are trading these through NQ, some of you are trading this through like a potential stock or an ETF like QQQ. This is actually a trade that I'm personally in right now and have been in for over about a week or two now, or like a week or so, and it's been going very, very well. But I just want to make sure that before we start today, you understand that US 100 is basically NQ, US 30 is basically ES, and we're going to use that as the initial foundation for the video that we're going to have today. And the reason I thought I'd make this video today is because, so this right here is also part of the community, by the way, in terms of like the screener, the portal material, every aspect of it. So like all of this, you can see there's like an unbelievable amount of videos that work you through everything step by step. So it's kind of hard to make these videos where I'm just like, all right, here's like it's very hard to make a video where I just get to show everything, but I'm going to try to do that today. Right, as well as all this, you get a place in the community, of course. And most recently, at least today, as we're speaking right now, we have players, members, clients, everyone, even funded members. You can see this little thing as a funded member, trading things like YM. So this is also kind of an indice. It's like ES, it's like NQ, it's like US 100, it's like US 30. It's all the same thing. He got to trade this and make a good bit of money on it. You can see throughout the week, or actually just throughout today, this guy did very well on US 30 to the upside. Today as well, this guy did very well on YM, so it's the same thing as kind of US 30, but very similar. This guy right here did very well on US 30. So there is consistency within an approach. There's a consistency within a way to approach markets, a step-by-step to approach markets, how to think about markets in terms of steps. And what I want to do in this video, like right now, as we're talking here, is kind of walk you through some of the things that people used to actually get behind these markets all on their own accord, to spot these things for themselves and to actually trade them. So the foundation of everything I teach and the way that I think, actually everything on the chart right now is literally everything that I use. So everything you see on the chart is everything I've ever used to actually get behind a move, to take a move, right? The only additional things would be potentially labeling things. So like if I go to a specific pair right now, you can see I have a few labels on here, right? So you can see like if I go to this, there's a few labels. If I go to QQQ, this is a market like US 100 that I personally traded, you can see there's a ton of labels. So the only thing I do is I use exactly what you see in front of you here. This is the mentfx structure premium that contains all this stuff. This is available to all our members all in one spot, as well as the toolbox, all available in one spot, which actually lets you very simply see the moving averages on another time frame. So there you go. You can see these are the daily, but on an hourly. Now you don't need any of this. You don't actually need it. You can literally go and just add these all independently. You can pay for TradingView and you can add these as you see fit. But the simple version is that this is what I have on my chart. You guys can literally copy this and add it to yourself by just adding independent moving averages. So remember, you do not have to pay. Paying only makes things more efficient, right? So the only thing I only use in my trading is labels. So labeling things myself and drawing lines, and these few lines that get drawn for me, which are actually just moving averages. So these help me direct where I am in a market cycle. And all I do is I go across 3 time frames, and I pretty much follow this cycle in front of you right here. So a whole PDF of this is available to our team, but you guys can literally take a snapshot of it right now in this video, print it out and have this ready for yourself. And this cycle right here is made up of a few important cycles, which is basically this, the entry and the validation timeframe. So this is from the material itself. Everything you're seeing here is directly in the material and explained. So if you want more on it, you know exactly where to get that. But you can just take a photo of this and start looking for it and start seeing it and just read this and use it. I don't hide anything. Nothing is hidden from you. I'm going to give you as much value as I can in this video right now, but this is all I do. So I use what you see on the chart here, which is the averages and the understanding of where I might be cyclically, and then I simply relate this across multiple markets, and I ask myself if something is worth taking risk on. And if it is, then I take risk. And the act of, let me do this. And the simple act of taking, not Firefox, what am I doing? And the simple act of taking risk for myself in this exact capacity has led to an outcome that is in front of you right now. This is the current outcome, and if you've seen any of my videos, I've spoken about this a few times, this is the current outcome of me following these exact same rules. Hey guys, so I'm just coming in here for a second. So if you look at the equity curve and you specifically pay attention to the left-hand side here, where you kind of have this move higher, and then a little bit of just kind of slower moves higher here, and then what that looks like compounded, because this video was recorded actually a few months ago. So at the time of me doing this right now, it's actually August. And if we now open up my current data collection sheet, what you'll see is these areas right here, right here, is where my equity curve actually was at the time of filming. And you can see that since that time, over the last few months, I've taken trade after trade after trade that has generally stayed around the same equity level or around the same RR level and hasn't really made much of a move until very recently. This actually happened last week, where I had some very nice wins, some more break even, some nice wins, and then some kind of bigger losses due to some errors and some gaps or whatever, so ignore that. But what's really interesting is if you then take this and look across to the right-hand side where you see the compounded version, which simply means that you risk in accordance with the size of your account. Well, if you look at this on this right-hand side, you can see how my equity curve, even over all this time and over that same amount of time, has continued to grow basically unprecedentedly, right? To all-time highs, to the point where, again, I'm at new highs in my entire equity curve and it just continues to go higher. This is the power and the benefit of having a positive EV system, a system that you can rely on over and over and over again. And my system is primarily based on exactly what you see right here in this cheat sheet, which is available for all of you for completely free, no payment, whatever, none of that shit. Right down below. So if you look in the description, it's like that second thing there. So literally go grab this if you want, print it out, have a visual representation of basic trend of how you can follow it, and get very used to seeing this, because this is what the markets kind of move like. This is exactly what markets do, and this is exactly what I personally use to get positioned, and it's what you'll see in this video, the one you're watching right now, for getting behind moves. All right, see you guys. Right, so it's very, very simple. And then basically, in conducting an overall analysis, labels and everything, and coming to a point where I actually want to take an entry, every entry I take is unbelievably stupid simple. And my entry, for the most part, every entry I take is price that moves higher price that goes sideways, usually with moving averages that are still going higher or, you know, still kind of coming higher. And then all I do, this is going to sound crazy to a lot of you watching this, especially if you've never seen my channel or my other stuff, is I place a buy stop through the next high. I protect a solid bit on the downside, and I look for this move right here to make my money. And then I usually try to close out of the trade as it starts making this move. And some people that I've worked with, and even myself sometimes, will hold the trade for a much bigger move, and then the pauses again, then keeps going. And you know, you can make huge amounts of gains off of just small moves like this. But every single move I take, every single entry I take, is literally simply rooted in this setup right here. Now, on top of that, we can add other things like what happened before it to lead to an area where I'm willing to trade this, right? So you can see in this case here, even though the setup is as simple as price moves higher, price goes sideways, and I buy the high, and that's exactly what I did for this trade, or price moves higher, price moves sideways with the moving averages, and then you buy the high, and then it takes off, right? Even though that is very, very simple, and all my entries are gonna look like that, just so I can show you this, guys, I want this to really seep into your subconscious, because it's one thing just for me to say it, it's all the same thing, and it's another thing for me to show it. So if I literally scroll down, these are all my entries over the last 15 months, and I choose a random one. So literally any of these that I click on, so let's just say I click on this one, is going to be the same thing. It's going to be a move higher, a pause, so price is gonna pause. It's gonna pause usually pretty cleanly, like a small pause, that's what I look to trade, and then I buy the high. So I'm gonna show you that right now. All right, and here it is, right? Price moves higher, price pauses, I buy the high. Price moves higher, price pauses, you can buy the high. Pauses, you can buy the high. Pauses, you can buy the high. That's what I did right there. Let's do another example just randomly. Let's do this one. So you can see right here on the left, price moves higher, it pauses, you could have bought here, it moves higher, it pauses, you buy the high, and that's exactly what I did, and I managed my trade. So again, right now I'm not talking specifically about management and all that, I'm just showing you that in terms of entries, there is nothing absolutely special or insane that I'm doing. It is always the same entry. The special thing comes with the fact that I'm patient and wait for the good entries, and that I just simply compare multiple things until something is worth executing, which is what I'm going to show you today, which is actually going to be the discussion that comes from what we've seen here, which is that you have members trading these beautiful contexts and these beautiful cycles across timeframes that make the most sense for them because they have a way to orient themselves around timeframes. So just to show you the best version of this, you can see we have a very specific way that we think about timeframes, and to save you the boredom or to save you money right now if you really don't want to spend it, right? EVC, which is exactly what this deals with, is a simple way to decide timeframes that you can trade right now. So simply you take an entry timeframe, let's say you want to enter on a 1 minute chart. What that means is your validation is going to be about a 6x multiple, that's a 6 minute, and then your C is going to be a 10x multiple of that, so about 60 minute. If you simply used what you just saw me do, and you just added this to your repertoire of timeframes or thinking about timeframes, you will instantly make more money, because what you're gonna do is you're gonna create guardrails around the actions that you take. So if there's anything I can give you just in this video, like for free, it's this. Have a way to allow timeframes to balance out what you do. Don't just randomly open up a chart like a lot of people have done over and over and over again and go, all right, I am on the chart, let me see what I can do. So price is taking out a random high, then it came up, it broke down, that's a change of struct, that's a break of character, the structure's breaking, I'm gonna sell here, and then you sell, and price never goes down, and then it goes against you, and you're permanently confused why price is going against you, right? This was just one example of many ways that people make this psychological mistake trading, but ultimately thinking that one small pattern on some time frame is gonna make you money will not, right? A lot of trading is telling a story about what is happening. So that is one thing that I personally use that you can add to your own repertoire right now. That's a time frame based approach to understand how timeframes kind of funnel together. Now that that's all out of the way, the question really comes down to, how did these people basically spot these trades on things like US 30, on US 30? Again, this is just simply ES or YM, which is, what is YM? That's the Russell, right? It's the E-mini Dow Jones Industrial Average, so the DJI, right? How did these people spot the moves on? Let's actually add all these. So what we're gonna do to make this really clear is if you look at the right-hand side here, we're gonna name this one US 100, just so everyone gets this straight. And what we're gonna do is we're going to go add, we're gonna add QQQ. Now so this is very clear to you. This is US 100, it's the same thing. We're also gonna add US 100. we're also going, so we're just going to add that. We're also going to add NQ. That's the futures contract of US 100. Let's just add it right here. So what I'm doing is I'm just creating a mini watch list so you guys understand that all of these assets, even though they're maybe named differently or priced differently, are the exact same thing. And if you actually look through them, and you look through them, and you look through them, they are all, for the most part, the exact same thing. And once you realize that, you stop getting super confused about the fact that, you know, people are trading stocks and cryptos and stuff. And what's really fun is if you look at my screen here, a lot of the stuff I've been trading recently is cryptos. And there's been a reason for that. A lot of cryptos have shown to be really strong. You can see, if I go inside of this, I had a long setup on this that I ended up taking a break even on. I had a long on this that I actually took 4.5 RR out of. And if you notice the entry, here you are. Here's the entry. I hope you guys can see that. You have an up move, you have a pause, price pauses right above the average. I take the next long and I make money on the follow through of that. And I took a partial very quickly up here because I thought we were getting extended, and then price kept going. And we are here now. Here's another one. I did not trade this one. This is the one I already showed you guys. I think that's it for now. Oh, and I took a little crypto long here where you can see the same thing, right? Price went up, price paused, and I simply bought the high, right? I bought through the next high, I bought here, and price paused, so I closed somewhere inside of here for a little bit of a loss, and you can see price then took off without me, but that's part of the game. A lot of trading is just managing your risk on the downside and waiting for a good upside, right? So a lot of my trading, and I've spoken about this a lot in the past videos. Let me move this up. A lot of my past, like in my past videos, I've spoken about my own results, and a lot of my trading is just literally, if you kind of read these numbers, a lot of it is protecting my downside, and then only a few trades making up the beautiful upside. And then what happens is if I then throw this together overall onto a chart, this is just assuming as a 1% risk, right? You can see the compounding of the curve becomes insane. And despite all those results that look very mediocre, it becomes something beautiful, right? So with all that aside, let's talk about kind of what led to this stuff right here. So a lot of these trades, and the reason it's so hard to make like a video about them and just make them simple, like a lot of YouTubers do, or I can simply go to something like US30 and be like, well guys, you can see we have structure up. So what I did is I bought somewhere inside of here and I made my, like, I can't really do that because a lot of the trades that we are taking, a lot of the things that we're doing are deeply buried in kind of a multi-time frame over time analysis and putting that all together into a story. What we actually do as traders, if you really want to think about this, is we try to determine what the story of the overall market is, right? If it's bad or unclear, we actually sit, well, here we go. We actually, for the most part, sit on the sidelines, right? We do a lot of nothing. We kind of ignore price. We most importantly ignore patterns, even if the patterns look good, right? So this is the idea of you studied a pattern, some YouTuber told you about a pattern, or your Instagram like guru told you about a pattern, but you have the ability to sit out and ignore it because there's not an overall story, right? So a lot of the time when the story is bad or unclear, even though stuff is happening, because guess what, guys? No matter what day it is, something's gonna be happening. Let me actually make this into the US 30 one so you guys can see this. We're gonna add US 30. We're going to add ES to this list. This is just the indice. We can even type in US 30. I'm sure there's other like leveraged versions of it because I just want you guys to understand that like you can have multiple different names for things and they could all still represent the same thing, which is very, very important because a lot of people don't understand that or don't know that about the market. So like men funding, for instance, you can trade like US 100 through an index, but you can also trade the futures contract of the NQ or the ES, right? So these are all just like markets that are tradable. Now, regarding story, right, something that you have to understand is that if there's a bad underlying story, we don't actually touch the market, right? And then the opposite of that, if it's good, right, or clear, then it's actually interesting because it doesn't mean we're executing. This is what a lot of people think. No, right? Instead, you're actually just, if you look above, you still sit on the sidelines, right? You still do a lot of nothing, except you're usually there in case something does happen. But most importantly, you're willing to execute instead of ignoring price, right? And if the opportunity presents itself, we execute. So this is where it becomes very important, because the notion of an opportunity presenting itself is completely based on the trader and their own understanding of tools, of their education, of potential comparison with other things in the market. That's why I'm making this video right now, because I think it can be very important, and I can actually teach you a lot of things, hopefully, with this video alone. But the idea of an opportunity being present doesn't come from just the fact that you have, oh shit, look at that, a pattern, right? What an opportunity being present means is, quite literally, if you think about this step by step, the story has already become good, right? It's become good. And then factors of a market markup are aligning. So these factors are like one of the most important things, because for me, the factors that go into a market aligning for me is an EVC. This is timeframes. So for me, the timeframes already need to align. 2 is cycle. Where are we in the cycles, right? And this includes the momentum cycle and the entry cycle. Now again, you might not know what a lot of this stuff is, because again, a lot of this is taught in a very, very niche and specific way. But if you think back here, this is all it represents. This is what is known as the entry cycle, and this is what is known as the momentum cycle. So what I do is on higher time frames, which is the momentum cycle, for my EVC, so this is on the V and C time frame, I look for prices that are literally creating a cycle of step-by-step on the rising averages. That's why you see on my chart, the only real averages I use is this 5, 10, 20, and this 50. But mainly it's the 10 and 20. Those are the ones that orient myself in the overall market for a specific cycle or a specific move, and if it's even worth looking at something, right? So what comes to an opportunity being presented is all of these things already aligning. These are factors of the market, right? Other factors would include the look of the averages, how the averages are moving with price, the stage 1s and 2s in the market. This falls into cycle. So all of these things go through my mind when I look at any market at any point. Now, let me show you a very quick example, but for instance, on like the stages part, right? All markets move in this specific way. This is literally taught as part of the material, and at the end of the material, you actually get you can see this little thing here, you actually get a certificate to, ignore that for a second, it's because I'm logged out, but you actually get a certificate. Here's my certificate, because, you know, thank God I passed my own course. Phew, barely made it, right? But this is part of the information, right? And once you've understood the information, you'll understand that all prices actually move through this simple market dynamic where it goes through a stage 1, a stage 2, a stage 1, a stage 2. All markets do this. If you really study markets, this is all they do. If you've heard these weird things of like consolidation, move, distribution, fucking manipulate, all this nonsense, none of that is important. What's really important is to understand that prices move from 1 to 2, from 1 to 2, from 1 to 2. And what you can do is you can overlay a cycle on it, something like what I've already shown you, right? The cycles that are labeled, to understand if the delivery of these stage 1s and 2s is clean. And what you can also do is you can overlay other factors like the moving averages on top of that to say, is it also moving clean in regards to that? So all of this that I'm talking about right now are examples of factors that lead to an opportunity potentially being present so that we can execute. Another important one is something like relativity. I've spoken about relativity quite a bit, and it's of course, like, this is basically the comparison. And when people hear this, especially on the public forum, like what I'm doing right now, a lot of people start thinking, what is it? The smart divergence of truth, whatever the fuck that people call it. A lot of people think it's SMT or the smart divergence of truth or the crazy concept that what you need to understand is, please forget all of this stuff. It's completely useless if you're watching my videos. Relativity is simply understanding how when money is coming into markets, because money, that's what money is doing, right? Money, trillions of dollars, billions of dollars is coming into markets. When that happens, you are going to have markets that kind of show you their hand. They're kind of telling you what they want to do. Because what happens is, if someone truly wants US 30 to move, or someone truly wants Bitcoin USD to move, or someone wants this random fucking syrup USD coin to move, what's going to happen is they're going to start putting money into it. That could be an individual, that could be huge institutions, that could be banks, that could be countries, that could be countries putting money into nuclear armed facilities, into stocks associated with nuclears. Again, it doesn't matter. The point is money flows into things. And when money flows into things, you get to see that represented in the chart. It represents itself through relativity. It might show you a lot of strength in one asset, even though another that should be similar is not showing much strength. So the reason this is important is because what you'll see is that US 30, otherwise known as ES, right, all the same thing, US 30, ES, what you're going to notice about these markets is that comparatively, ES even today, so if we look at today's action, like up here, this is today's action, this is the first was right here. If we look at today's action, starting on this day here, where price literally started on the rising 10 on the hourly time frame, NQ, right, again, same thing, you can see there's a drastic difference as to what's occurring, right? NQ starts on the falling 10 average and is actually below it. So it actually, relativity-wise, shows you that even if both markets are bullish, which one do you want to buy? Let's assume you don't have a pattern or you don't have something special to do. You simply know that when something is weak and the other thing is strong, you want to put your money into the strong thing. So if at 9:30 a.m. today, this market's opening here, like in this very bearish kind of context, but you overall want to buy, and then at the same time, ES opens. Well, it actually opens here and is also somewhat bearish, but it's more about the fact that, let me show you this. It's more about the fact that as you get lower, you can have differences that are large enough for you to follow one market. So just to show you this in the simplest way possible, right? Let me show it this way. Market opens up, right? As NQ goes through this huge cycle on the downside. Let's go to a 6 minute just to demonstrate this, right? As NQ opens on this day right here, this is today as we're speaking, right? So I'm literally walking you through today's action. Opens up here, kind of goes sideways and just literally sticks itself on the downside of the market in a very, very bearish market. And then, you know, around 1 p.m. starts to push up above the averages while being after, like, in this huge down push. At the same time, right, ES opens up, fails to hold itself under the averages, pushes up above the averages, right, falls down below the averages, and then by that same, an hour before NQ, actually moves out of a stage 1 or out of a sideways market and moves into a top side market on the upside, right? That market is telling you something. This is what true relativity looks like. Notice how I'm not sitting here looking at like special things associated with relativity, like losing my mind over what's happening. I'm simply looking at the move and the cycle. The cycle is what's telling us the story about this. One is moving extremely heavily to the downside in a market that I'm already expecting to be bullish, and one is moving to the downside very weakly in a market I expect to be bullish. So if I'm expecting the market to be bullish, which is one of the most important things, an expectation, if the expectation is that it's going to be bullish because of the overall area that it's delivering within, take a look, it's clearly telling you something, then the one that is showing more strength, right, throughout the day, especially later in the day, here we are, this one is the one that's going to offer the best potential opportunities because it's clear that money is supporting the move, right? So even though money is potentially coming into both of these markets, right, what's happening is money is supporting, at least on the top side, is coming into it heavily, and that can be demonstrated simply by looking at the averages, the interaction of the averages with the price. Look at them here, look at them here. You can tell which one has more money basically bouncing price up, like literally eating all the sell orders and trying to take price higher. So that can be your telltale sign of, oh, I know what I should be following. And as a result of that, you get to a point like this where on your 1 minute chart or on your 1 minute entries, as price, let me showcase this. Dow Jones Industrial. It's the YM, right? Yeah, so for a lot of people, this was on the YM as well. YM. We'll put this in the fourth one. And starting today, 9:30 a.m. So, I mean, this is even a better example because here's another market that you're expecting to be bullish. So I just want you to look at this. So here's NQ, the beginning of the, again, what I want to preface, what we're going to do is we're going to make all these green. So what's really important to preface is that all of these markets we have been long on. So this is how you do story since around this point here. I want to make this really clear. So from around this point here, where price moved above these points and began to put in this bullish action and stayed above these averages, we have been extremely bullish as a team on these assets, which is why I've also been trading a lot of like markets, stocks and everything, because it's a stock market that's going higher. But if you're just like an NQ trader or whatever, then of course you can just trade this. It doesn't really matter. But since here we've been very bullish, I'm just going to keep it at that. If you really want to get crazy about it and you want to know more of like, how did you know it was bullish? What are you doing to see the bullishness? You can simply look at this right here, this validation cycle, and think about this in the form of 1, 2, 3, 4. Okay, I want you to just think about this in terms of 10 and 20. You can go and label some of the stuff here, and you can see how it holds above the 10 and 20, the 10 and 20. So these things repeat themselves over and over and over again. But the simple thing that you need to understand is that from here till here, I have remained one-sided on this market, which is important, right? Because if you're trading a lower time frame and every day you're showing up to try to pick the new top, 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 then you're going to be stuck picking the top for your whole life. And then when it's going down, you're going to be stuck picking the bottom for your whole life, and you'll never get things right. This is why it's so important to have a process, to have steps, to have a cycle associated with what you're doing, right? So when this basically came above here, which is the minimum of what I'm going through. So again, stage 1, and as a stage 2 begins to the top side, as it's above the averages, this is how I teach the people to think about cycles, we have a cycle of momentum being created to the top side. That's all that is. That's as simple as that can get. Here it is. So you have the entry cycle. This is what I use to enter. You can go ahead and take a photo of that if you want. And here's the momentum cycle. This is what I use to judge where I am on the higher time frames. Remember, think EVC. Here's your E. Here's your V and Cs, right? It's that simple. Here's your V and Cs. Okay, I don't make this complicated, but also teaching it all in one video is going to drive me wild. Look, we're 30 minutes in. I haven't even gotten to explain what I want to do because there's so much fucking things that I'm trying to kind of work you through if you are new to this channel, right? So this is a momentum cycle, and you can kind of judge where we are just by looking at this. But I believe by looking at this right here that we are around, but we're basically in this part of the cycle, right, where we came out of this sideways and we started this push. Here's that push. And we've kind of went through what I assume to be, I think we're around here in the cycle. We're probably around here in the cycle. So right now we might have another move higher and then a pause that leads to this kind of sideways and then accumulation. So you can kind of see what I expect and what I would expect even long term on this thing. And you can see that from now, if we are around here, what the expectation would be. It could be a continuation delivery or continue into fall down and then restart, or right now, fall down and then restart. But most importantly, nothing about what I just said is like, I want to get short. I want to figure out when this market is done going up. I want to be the guy that can predict the downside of the market, because the people that make money, just so you guys know, are not the people predicting the top of the market or the bottom of the market. The people that make the most money make money right here in the middle. Something's going up, they understand it's going up, they trade it going up. That's as simple as it gets. Something's going down, they know it's going down, so they trade it going down. And then on top of that, they layer good risk, they layer good risk management, they layer the fact that they're not doing things emotionally for no fucking reason, and they make money long term. That's really it. It's that fucking simple. But everything begins, or the story of this asset, or trading this asset, or even trading this asset today and making money on it, all begins with the simple fact, right, with the extremely simple fact, YM, US 30. Oh, this is the ES. Oh, I'm sorry. US 30 is YM. This is why I was getting confused. And this right here is basically the S&P 500. So those of you that got to this point, I hope you guys spot me making this mistake, but there you are, right? It's very simple. So US 100s, US 30s. So this is what made sense. Yeah, the US 30 is going very well. And as a result, the YM, which is US 30, is delivering very nicely. And that's the one that people made a lot of money on. You can see today it had a very big up day. And that up day was met with what? A huge amount of profitability for people that can see that relativity on a cycle that's already delivering, which is all very important because look, the cycles of all these markets are the same. Since around this point here, we've been in an up cycle. Since around this point here, we've been in an up cycle. Since around this point here, we've been in an up cycle. And you can see, even myself, since this point here, I've been up. Oh, you can actually see my labels right here if you want to see them, right? We've been in an up cycle, and you can see I have a position currently running that's managed, and here I'll even show you it, right? So this is that position. It's all the same thing. QQQ 2.2. I'll move myself over. QQQ 2.2 currently RR that I made on it. Here was the setup. Very, very simple, right? Up move, sideways. I took this trade, and now, as you all just saw, you know, this trade is, here it is on the hourly. Here it is delivering, and it's delivering beautifully. This was the trade right here. Price tapped me in, and then since then it has never looked back. I've taken some money out, I've moved my stop, and it's just a simple game of letting it go. And similarly, our members used this exact context or this story of the market, which is that we are heading higher, to wait for an opportunity to also trade it higher. That's where everything starts. So it's not like people are here going, I finally figured out the bullish day, because the bullish day was already expected fucking like years, okay, not years ago, but months ago, right? We expected this bullish day from when the bullishness had already started, which simply means what we're doing is we're waiting for the story that's already good and clear to now, here it goes, to now sit on the sidelines, do a lot of nothing, even though we're at the market, while willing to execute, so we're still waiting. And if the opportunity presents itself, which means all our factors are now aligned in a good market, we execute. So funny enough, if you made it to this 32-minute mark, 33-minute mark in this video, you've now learned more and have more you have more in your own mind as a trader than 90% of people that are failing or have been failing for a long time, because most people do not understand how to think in this exact step-by-step to start with. The fact that you now understand that is huge. And now we can do a simpler example or a breakdown of what led to these trades, because guess what? If you just study even the trades of this member right here, what happens? What is he trading? Well, price moves up, price goes sideways at the rising averages, and he bought through the high. You guys might have seen that somewhere else. The start of this video, I literally walked you through simple versions of what my entry is so you could understand it, so that then when I literally click on anyone else's trade, you see the same thing. This is literally the same trade. Price does what? Price moves up, goes sideways, and he buys it. Now again, where he's buying it, where it moves up and goes sideways and he buys it, is important. Where are you in the move? Where are you with the moving averages? Those are all aspects of trading. If you think that just simply because prices moved up and gone sideways you'll make money, you won't. That's far from the truth. And of course, this little system right here, this process can be made even more efficient by having things like a scanner to screen for things that are literally moving, especially over like 2 candles. You can literally go to the things moving over 2 candles, look at them and say, I want to buy it. That's it. That's how simple trading can be. So what led to the trades, or to a lot of people that traded this thing right here in front of you? What led to the people that chose to trade this action right here in front of you? Well, the first part, before we even look inside of it, is that we have a bullish story, a market that is telling us to go long if the condition is right. Okay, so we want to go long. Now on this specific day, and I want you to keep this in mind, look at how this day looks. Here's what the day that just now a lot of people made a lot of good money on looks like. I want you to understand that this is not the only day this kind of thing happens. People do the exact same thing in our team, online, all over the place, even on this channel that watch this video. Maybe even you in the future, after watching this video, might do something similar. People don't just make money on their longs on days like this. They make them on days like this, like this, like this, like this, because they still can take a win or even a break even or even no trades at all, like this, like this, like these, like these. There could be more chop outs during these times because that's how markets work, but that's fine. Like these. During these times, they might just sit on the sidelines or take a loss before it goes lower. These are all opportunities to do the exact same thing on a potentially lower time frame if that's what you're trading. So keep that in mind, because it's not about trying to predict the next high or the next low. It's not about trying to get this exact down candle correct on this day so you can clear out the fucking lows and get to the imbalances or whatever people are doing. It's not about trying to predict where this beautiful train of longs will stop and where the train of longs will finally stop and become bearish and I can catch it, because this is almost never happens. A lot of the time, because of how accumulation works, you go like this, and off we go because the trades are here. Or like this, and like this, and we're good to go, and the price delivers. And people are always confused why, you know, when price broke down, it didn't go down. Well, it's because you're in a cycle. You're in a market environment. You're in a story. And the story overall so far is that of upside, upside, and upside. So going into the market knowing that you already have the opportunity to create upside opportunities for yourself and make money multiple times before is huge. Not knowing what today was going to happen, whether it's up or down, is important. You know, like, I know a lot of people might even after this be like, oh, hindsight fucking warrior. First of all, I want to remind you guys, everyone that trades, that actually is doing this live, that is making money, that is doing their 5 figures, 6 figures, 7 figures of funding, and we have multiple of those, many funded members and everything, all of them are doing it before it ever happens. I'm just here as the bearer of good news that says, hey, look at what people are doing. Here are the steps that are using to do it. Please, please, please use some of these steps to improve your own trading. That's all it comes down to. So when you're coming and showing up to this day, you don't know if the day is going to be down or up. But what you do know is that if the day is going to be down, you're going to take a loss, maybe 2 losses at max, and you walk away. Or you'll take nothing, and price will just simply be in one of those states where you get to sit on the sidelines and do a lot of nothing, even though you're there to execute, because a lot of trading is sitting on the sidelines, right? And in the event that it's not a day that just goes down or is a day that actually goes up, you know that you have another opportunity just like you did multiple days before. So again, think in the form of, instead of thinking in the form of you have limited opportunity, think in the form of you have almost infinite opportunity. And all you need is a day like this. This day could also happen tomorrow. There could be some sidelines, sideways, and then those days can repeat again for 3, 4, 5 days in a row. Because at the end of the day, when you realize that the opportunity in the market is infinite, but your money is not, you start to care more about saving money in times where it's not useful to put it to work, and then making a fuck ton of money in times where it's going to put itself to work in a very big way. So that's exactly what these members did. They said, hey, this thing is delivering. I want to watch it deliver. And then it's basically showing you that US 30, otherwise known as YM, has shown a ton more strength on this given day than anything else, right? NQ kind of opens up, starts moving down. Here, I'll even show you this on an hourly time frame, or a 1 minute time, or like maybe a 6 minute time frame, right? ES opens up, starts moving down. Again, it shows some strength, and you could trade this strength inside of here, but you can see because the strength is melancholy, it's not as strong, that relativity leads to quite shitty moves, and that's fine, right? But ES is basically opening up and showing a little bit of strength. NQ is opening up and not showing any strength. Remember, all of this is during a time you suspect longs. I'm not sitting here going, it's weak, it's short, I need to sell this market, because that's not how I think. Right? I don't need to put my money to work. I want to wait for the best opportunity to put my money to work. That's where my risk is worthwhile. So NQ opens up, it's very weak. ES opens up, it's maybe like a little bit stronger, but whatever. It's like sideways kind of shit. This thing opens up in a bullish market, in a bullish context, and then continues delivering. Look at this market. This market is almost impossible to lose money on. It's that easy. And again, a lot of these traders, the ones that we're looking at here, the ones that did very well, are operating on a 1 minute entry. Look at this entry. Look at this entry. They're the same entry. Then he has another entry here because he took one, and guess what? This guy didn't take that entry, but it doesn't matter because he's making money on his first entry. So at the same time, there's not only one opportunity to make money. You have multiple opportunities every single day inside of every single asset, or not every single asset. You have a ton of opportunities every single day across many assets to make money. Your goal is to wait for those assets to be in a good state, just like our members did here, and then when they're in a good state to set up for a good move. And that's exactly what happened. So the relativity form is already covered by the fact that this thing is showing insane strength. Because remember, when this opens up back here, like let's look at the 1 minute. When this thing opens up back here, remember, all the traders that we're looking at traded here and here and here. Not even here. So really think about that, right? By this point, you need to be certain that the market, or this market specifically, is the one worth watching. So let's look at it from this point. Look at what's happening. At this time, prices opened up, right? Prices open up. This is the 9:30 a.m. candle right here. This is the 9:30 a.m. So again, this is all liquid hours. Notice something important. What I have in my trading view is I have this session set to regular trading hours. So at regular trading hours here, prices open, moved higher. Okay, during that same time, ES has what? Already been on the downside and opened down here. Okay, there's not much to do. NQ has done what? Been already on the weak side and opened up down here. So there's clearly one thing sticking out to you like a sore fucking thumb. YM, or US 30, is telling you on this day, hey, you already want the indexes to go up. That's already what you're expecting given your higher time frame. And we know that because we've already walked through that in this video. So which one of us do you want to put your money on if we set up? Well, YM becomes the easiest option, right? So if all I told you was, here's 9:30 a.m., no risk, no patterns, okay? Here's 9:30 a.m. and here's 9:30 a.m. Sorry, here's 9:30 a.m. Which one do you want to randomly buy? Just put a buy order on it. Is it this one where it's down here under all these averages? Is it this one up here above all the averages? Or is it this one right here down here above under all the averages? Well, of course you would just say, okay, I'll just buy here. Done. I'll buy a position here. Okay. You just made money on the day by simply understanding relativity and strength. Now, we're not just trading relativity and strength. We are trading an actual setup that allows us to do this at the highest level. So a lot of these traders are operating on the 1 minute entry, 1 minute entry. Now you guys can do what I've already taught you. Take the EVC. If my entry is a 1 minute, what does that mean my V is? It's around a 6x multiple. So you can use like a 5 minute, you can use a 6 minute, oh, you can use a 10 minute, doesn't really matter, but something around there, 6 minute. And your C is gonna be around a 10 minute, I'm sorry, a 60 minute, if you wanna go through the steps of the cycle. And what you'll do is you'll wait for the V or the C, or both, to get into a cycle worth trading. And that's exactly what our traders did. So when price up here moved higher, started to sell off, and sold off to the rising 5, that's this light blue line, 10, that's this black line, and this 20, which is the red line, while being bought back up, this creates what we call an MMB. That's what I call it. You can call it whatever the fuck you want. It doesn't matter, but this is what it's doing. It's pausing on the, yes, look, this is from the material. On the 5, the 10, or the 20. Literally, like, if you just get this material or just copy this stuff in front of you, but I do suggest you go through the material, get your certificates, post them, because I really want to work with you. If you're watching this, even to this point, whatever, if you're 43 minutes into this video, you should be part of the team so I can work with you. I want you to grow and I want you to use things that make your own profitability more efficient. Okay, done with that. So if you just simply use this, right, you are going to see the exact things reflected here become the entries on your own markets. So guess what? We're in this MMB1. We're creating the sideways on the rising 5, 10, 20. Now, just because we're doing that doesn't mean we enter. So here comes our entry cycle. When that's happening, here's that same MMB1. Let me show you what's going to happen on a lower time frame before we even go to it. So inside of this, which is what we're going to label right now as the MMB1, as that is happening, I'm going to use the colors you guys know from the mentorship, but here we go. As that is happening, here's what we know is happening on a lower time frame, otherwise known as the entry time frame. And in our case today, it will be the 1 minute time frame. What we're gonna see is we're going to see a flush down to the 5, 10, or 20, where we're gonna see a flush below or to the 20 EMA. And after a flush, what are we gonna see? We're gonna see price start going sideways, and as it moves higher and makes the principal move, the special move that I've been telling you guys about, where it makes a, let me do this in like a nice little green, where it does a move up, goes sideways, then we buy the high. You buy the high, you manage, and if it doesn't work, it doesn't work, and you wait. And then what does it do? It makes a move, it goes sideways, and you buy the high, you manage, it never comes back, and now everything above is pure profit. So let's work through those exact steps. And now I call this setup, the one you see in front of you, I call this the double MB setup, where basically price comes down and makes 1, 2, and you buy. Sometimes it won't work. Take a look. That's why this is involved in the cycle I teach. Sometimes it'll flush 1, 2, and it'll start to move. And sometimes even inside of that, you'll see a flush and it'll go 1, 2, and you'll trade it. Now that's a double MB entry. Another entry is a, well, the double MB, which is what this is, can also be viewed as the simple thing I taught you, which is move up, sideways, I buy, or move up, sideways, buy the high. Move up, sideways, buy the high. Now that's not a double MB, this is known as an MMB entry, but it works the same way, and it also is an opportunity to make money. So with all this in mind, let's see what this thing does. So remember, we didn't arrive at this YM randomly. We didn't just randomly say, oh, we're gonna trade this because I remember in hindsight it made money and it went up. Oh, let's fucking see. I chose this, and I'm showing you it from this moment right here in front of you right now, because we have traders that traded this thing today through the exact same principles that decided on this thing from months ago, because there's been multiple indexes moving higher, and this thing has shown relativity in terms of the way it's delivering. So as this is now moving sideways, we jump into the 1 minute time frame, which should be doing what? Well, you all saw it now. It should be making a move higher, stage 2, which it has, making a stage 1 now, which is a flush to where? The 20 or below. And from here, what should it do? It should build accumulation and create an area I can make a buy on. That is it. So price does what? Here we are. Take a look. Price does what? price comes down and starts a potential accumulation. Now, this is a little bit weird because you can still trade this, right? You have one, and now it's building a secondary one. You can already have a buy set up right here. There's nothing wrong with that. Now I'm going to use a moment to actually plug the mentfunding.com, but the only reason I'm doing this is because I want to make something clear. On a futures market, on our highest version of account at the moment, your available leverage is up to 24 contracts. 24 contracts, just remember that as we do this. So what that means is that when we're here, let's just let this play out. So you can see price kind of moves higher, pauses, it's still pausing beautifully, and you could literally be a buyer through here. And again, we're not gonna do 24 contracts, but look, if I wanna risk $3,000 on this trade, it's 22 contracts. Okay, right, this is a completely potentially viable long. Whoops. This is a completely viable long, given that this is your rules. You put your stop loss below the low, and this could be your initial trade, because at the moment, all we're seeing is an MB buildup, MB buildup. And what do we see? We see a move up, a pause. Here, I'm actually gonna show you this, guys, from a beautiful angle. We see a move up, a pause, at or around the averages, and what are we doing? We're looking to buy the high. Take a look at this now. Remember what I did at the very beginning of this video? I said my system for entries is a move, and then a buy stop of the high. So if I buy stop the high, and I protect the form of that, I should be looking to make money inside of this stage 2 right here, and then I can hold for a bigger move if I want, or I can close out through management. That's it. So this could be an example of a trade you take. Now, what does price do? Well, take a look. It moves higher, and then it pauses again. This right here, guess what, is another opportunity for an entry. I'm not going to take another because I'm already in it, but this is another opportunity for an entry. Okay? Then what does price do? It moves up, because this is all move up, and it pauses. All three of these are opportunities for an entry. All of them offered an opportunity to have management, like at this candle or below, this candle or below, and you can use an ATR, which is what I do and I teach my team to do. I can't keep walking through everything I teach because it's going to be too much. But these are all aspects of risk management, of calculating risk management, of how to use risk management, of how to think about what is it called, like stop losses and stuff. But this is all the same thing. So all these would be valid longs because you're expecting the stage 2 now. And as price moves in your direction, you can simply take all the risk off, done. I hold no risk on this trade, and you could already do this, by the way, by here. Just to make this really clear, by this candle, you could already have 0 risk on this trade. So I wanna make that really clear to a lot of you. Let's go back here. I think we just deleted the trade accidentally, so we're gonna buy again. The stop would be here, about $3,000 risk. Price, like whatever, plays around, starts moving, you move to break even because there's no reason to have risk on this, right? You can just move around break even. And now it's just a game of, if this wants to deliver, I'll make money. If not, then I'll do something else. Now again, management for different people is gonna be different. But for me, my management at the moment on double MBs is very, we'll use a simple one where basically you wanna see price move higher. If it pauses, take a partial and the rest, let it run. That's literally it. So, and we already know that it's going to run for a nice trade, but you get multiple of these opportunities as well, which is important. So you get like your move, you wait for some weakness, right now it's just delivering. Maybe you get a little bit of weakness, so I'm just waiting for price to basically like break down below a low, because right now it's just in pure strength, still strength. Now it breaks down. So now you can maybe take half of your position off. Done. Half of your position is now off. That's great. And the rest you can just let it run either with the 1 minute or even the 6 minute, right? Because the 6 minute is our validation. This is what I teach my team to do. So we'll just leave the stop kind of down here. We'll let it pause if it wants to. Let's see. Pauses, moves a little higher. Maybe you can move your stop down here now. Pauses again, moves a little higher. Maybe you can move your stop down here now. Just moving with this overall move. You get this very nice up candle and then another up candle after it. So we'll move to this up candle. We'll play it forward slowly. You kind of get this little pause again. We let it pause. Maybe it'll move a little bit higher. Kind of starts moving higher. You might even stick your stop below here. Just let it either take off or fail down. Makes a really nice little push higher. We'll throw our stop there. We'll let it kind of deliver if it wants to. Pauses again, and it stops you out right there for a move, right? And this could literally be your one trade in one day over all this time that you've waited, and you can already see, just given it a solid like $3,000 risk, we're looking at a disgustingly high reward on 1 day of trading. Now, not every day will be like this. Not everything will be this amazing, but I just want to showcase to you and let you really start to think about what risk and reward can actually look like if you allow yourself to learn the skill set first, right? We have had members in our own team that have had and experienced stuff at this level on their live accounts to a point where now, they look at this and, this is equivalent, just so a lot of you know, to around 255 years in the mentfx mentorship, right? So you won't even be, 25 years of mentfx mentorship. So 25 years from now, I might be dead. Okay, I hope not, but I might be dead, right? Like, that's how insane the material and the things that you can do for yourself are, if you just let yourself be patient for the good moves. And remember, this, funny enough, was not even the move that led to this guy's entry. My entry was through this high, but if you notice, this guy traded, he waited for this move. You can see that's where I traded. Here we go. He waited for it to move higher and then to pause. You can see that pause, and then he bought through the high. Just like we had discussed. Inside of here, I even told you all, you could have waited for this nice little up move and then this pause. And one thing that's really, really amazing is that our screener is going to have and has these markets. So all you can do is you can just simply program, look at this. You can simply go in here and you can program a 1 minute candle over the last 2 candles to be a big move and press save. And all that means is that when you now go from highest to lowest, you can literally see something that has now made a 31 tick move in the last 2 candles, and you go, okay, I could look at it. And when you look at it and it looks this good, you can just trade it because you know the steps you have to take to say if something is worthwhile. And this thing was worthwhile. And then guess what happened? When it moved higher and went sideways, do you guys want to know what's inside of here? There's another opportunity that looks the same. You guys want to know what's inside of here? Another opportunity that looks the same. You want to know what's inside of here? Another opportunity that looks the same. Let me show you. Let me show you. The same thing on fucking repeat. A stage 2 move, price flushes to the red line or the 20 EMA, price then does what? Moves higher and then goes sideways. You can buy here. Moves higher and goes sideways. You can buy here. Moves higher and goes sideways. You can buy here. Then what does it do? That opportunity creates a beautiful move. That then creates another move that comes down to the 20 and then does what? Moves higher and pauses. You can buy stop right here. What does it also do? It comes down, it moves higher, then it pauses. You can buy stop here. And what do you think we have in front of you right here? That's right. Someone that saw that same move, pause, and bought it right there. That's this move right there. And here is your outcome of that move. Then what happened? Price comes down to the red line, flush down. What does it do from there? Move up, pause, that's an opportunity. Move up, pause, that's an opportunity. Move up, pause, that's an opportunity, and it delivers again. All of these are multi 5-figure, 4-figure, potential 6-figure based on your account size opportunities. All happening within 1 day on a lower time frame with the simple, not super simple, but the simple understanding outlined at the very beginning of this video through a step-by-step approach right here, right? This is it. The story, is it bad? No, we know the story is not bad because we've been following this thing long. So it's a good story, but that doesn't mean we're trading. It means we're sitting on the sidelines and doing a lot of nothing, but we're willing to execute. And when everything aligns, especially relativity, so you literally see YM or US30 showing you insane strength compared to everything else, you just simply trade it long using the patterns and tools that have shown you which way price is going. Okay, so use this. Use this on any assets you trade. A lot of you do trade lower time from future, so use this. And then come back to the video and leave a little comment or whatever. And if you're still watching this, literally, just join the team, man, and use this. But I hope you took value out of this, because this is literally what I do every day, and this is exactly what my team does. And it's exactly how they catch and make money, get funded, blah, 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 off these moves. They're the same moves. There's nothing special here. You just have to fucking do it. Look at the tools in front of you. They're the same tools. Look at my chart. It's the same thing. He might have like a little bit of a different look because he likes it like that. But look at this. It's the same thing. He has a few different MAs on here because he's using the toolbox to see these. All right, so all he's doing is he has this set to the 6-minute chart so he can see where it is. Let me show you. So all he has on YM, right? All he has is he has this set to the 6 minutes. So he just see where the averages are, right? Because price is pausing at the averages. That's it. And then he's actually entering through these. The same thing you saw. Price moves higher, price pauses down into the average or below the average, then it moves higher and you buy. All we're doing is we're entering with the continuation. We're entering with the guarantee of price delivering. We're entering with new buyers stepping in. We are those new buyers. We aren't sitting there stuck going, well, hope it hits this area and then goes, I hope. Because we don't need to, right? We could just be on the move. And this was a great example, even though I know, it's all hindsight, blah, blah, blah. This was just an example, back test, like, / explanation of this guy's move. And remember, these weren't the only entries. There was also this one, and this one, and this one, and this one, potentially this one, but this is a little bit harder to trade or understand. And this one, and this one, and this one, even for a little move, and then this one, and 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 this. I mean, guys, like, and every single one of these on their own, if you really consider them, are opportunities to make a good amount of money for a small amount of risk. And then if sometimes they don't deliver, that's fine. You take your win and then you walk away. All right, I hope you use this. See you guys. Thank you.